Sure. So there have been three key changes on the personal tax front. First and foremost, there is an introduction of a new optional tax regime with lower tax rates and tax slabs. However, the benefit of the new tax regime will be granted only if you are not claiming any exemption or deduction. I would also like to highlight here that under the new tax regime, the losses from house property would not be allowed to be set off against any other income. Second, there has been a change in the taxability of dividends. Dividends will now be taxable in the hands of the investors or the individuals receiving dividends from companies as well as mutual funds. Earlier, it used to be taxed in the hands of the company as a dividend distribution tax. Third, there is a change in there's a change in the way employers' contribution is taxed to superannuation fund, provident fund, and a new pension scheme. Now there is an overall limit of 7,50,000 rupees, over and above which it will be taxable in the hands of the employees. It is likely to benefit individuals and HUFs who claim lower deduction and exemptions. Sure, so it is proposed that a new system will be introduced under which permanent account number will be allotted online instantly on the basis of Aadhaar. So it will be helpful for those who have an Aadhaar and are desirous of obtaining PAN. Those people will now not have to fill detailed forms or applications for obtaining a permanent account number. So under the current tax regime, ESOPs are taxable as perquisites in the hands of employees at the time of allotment of shares. It is now proposed that ESOPs will be taxable at the time of employee leaving the company or at the end of 5 years, or at the time of sale of shares as capital gains, whichever is earlier.